Good morning, ladies and gentlemen. It's a great honor to be part of this global gathering and share my thoughts on the role of Islamic finance in international trade. And what better city and what better country to be than Dubai and the United Arab Emirates to talk about the importance of global trade and finance. For hundreds of years, Dubai, and due to its unique geographical position at the crossroad of South Asia and East Africa, has enjoyed the status of a vital trading hub. With a rich history of maritime trade, the Emirate has always served as a hub for imports and export of goods and services across Asia, the Middle East, Africa. Dubai has also served as a knowledge center for the exchange of expertise, technology, and most importantly, for encouraging entrepreneurial activities locally and regionally as well. All of these achievements have contributed to the country's strong economic growth. Today, Dubai and the wider UAE has registered a meteoric rise in an economic and financial powerhouse, largely due to the UAE leadership vision and proactive facilitation of trade and finance. Investment in modern air transportation and ports, in financial infrastructure, and the vast expanding Islamic banking and finance industry have provided crucial thrust to encouraging greater movements of people and cargo. This in turn has allowed businesses to expand within territories within this region and beyond it. In recent years, global trade flows have undergone a paradigm shift. There is a significant increase in trade movement in Middle East and within the emerging economies, as well as in Islamic growth markets such as Turkey, Malaysia, Indonesia, the UAE, Saudi Arabia, and Qatar. Even 3 or 4 years ago, Islamic finance was less receptive to trade finance. However, the inertia is fast dissipating. Today, the exponential global growth of Islamic finance has meant that Sharia-compliant trade financing is a viable solution to businesses trading beyond their own boundaries. Amidst the changing global trade flow trends, there are some corridors which are more active than others. For instance, significant inflows are coming into Africa from China. Any bank in whichever geography that is mediating these flows is actually helping to facilitate global trade. Middle Eastern banks and within that space, Islamic banks are increasingly playing an important role, benefiting corporate and in turn benefiting banks as a fallout. As the demand for an open account transaction and structured trade credit insurance continue to rise at a rapid rate, opportunities abound for Islamic trade finance. Banks in general have an appetite to support international trade because there are underlying risks and therefore need to be put in place a credit facility. And so, more the number of Islamic banks in the financial landscape, the greater the risk appetite. But only of their focus is toward supporting trade. The Islamic finance asset base has been growing significantly, as we know. According to consulting firm Ernst & Young, Islamic banking assets grew at an estimated rate of 17.6 between 2019 and 2013, and that's poised to grow even further. Typically, in various markets, you would find trade comprising roughly between 20 to 30% of the actual corporate asset base. Given the market dynamics, that figure can increase if the banks, more so Islamic banks, are able to focus on that growth. With regard to the growth in Islamic trade finance, much of it's generated through bigger ticket syndicated transactions, which typically go through the sukuk structure. There is room for other structure at the opening level or the operating level of the working capital, where trade comes in with its short and self-liquidating nature. Whether you opt for Wakala or commodity Murabaha structure, it goes to address the short-term assets. Already, though, new structures are given a boost to Islamic trade finance. One of the areas where banks can add value to clients is to optimize their working capital cycle by providing short-term facilities. These can be offered under various structures. One popular mechanism offered by conventional banks is client engaged in open account trade, is a factoring facility, where a supporter is extended a credit line against buyers' invoices assigned to the bank. The facility can be leveraged with or without recourse to the supplier. Also, the buyer's receivables can be covered through credit insurances to mitigate some of the underlying risks. Today, total worldwide factoring volume is over US $450 billion, an increase of more than 90% over the past 5 years. Islamic banks have traditionally not ventured into these advanced supply chain optimization solutions for a number of reasons. These include high daily transaction volume, necessary Sharia-compliant documentation, mechanism needed to manage risks, as well as a major investment needed in dedicated platform and back-end resources for seamless delivery. Noor Bank, however, is one of few banks playing in this market and that has successfully developed and implemented a Sharia-compliant factoring solution for corporate and SMEs clients through appropriate investment in platform, people, and processes. We have also invested in credit insurance-backed structure, which Islamic Bank traditionally hesitated to do. If we are able to achieve similar innovation, it will aid the Islamic trade finance industry by promoting increased trade. In the process, such innovation will help customers, the SMEs who can avail such facility and be more involved in trade. Eventually, it helps every stakeholder across the spectrum. In fact, in the MENA region, SMEs are the backbone of the economy and therefore hold huge potential for Islamic trade finance. At Noor Trade, our brand catering for SMEs, we provide a comprehensive package solution for those clients that help finance their entire working capital cycle. The range of trade solutions is comprehensive, covering import and export services, LCs, documentary collections and guarantees, and financing options. More advanced supply chain finance solutions such as factoring, which we already offered, referred to earlier, are also available. Noor Bank is one of the few Islamic banks offering advanced and open account financing solution. However, before we are getting complacent and make the mistake of considering Islamic trade finance a challenger to conventional banks in the region, it's useful to remind ourselves of the issue that still need to be addressed. To quickly wrap, at the start of 2014, the Islamic trade finance transaction totaled only a negligible 1.5% of the total global trade finance transaction. Some of the challenges are not new. The primary challenge for Islamic banks tend to be documentation. This is all the same important when it comes to trade finance. We need to facilitate a user-friendly documentation, and that means making it straight and simple. The second challenge lies in the lack of customer awareness. Customer needs to know more about Islamic finance structures. There is a general hesitation when the prospective users are not familiar with the Sharia-compliant trade finance structures. The terminology, the structure, the movement of the funds, and the movement of the documents, all of these call to enhance customer awareness. The third challenge is the lack of standardization in Islamic finance. It's not different in other areas of Islamic finance. Different Sharia boards tend to have different opinion on trade finance structure. The structure gets influenced accordingly. Certain structures, as the Master Risk Participation Agreement, are considered standard and very prevalent among conventional banks. All conventional banks must be signatories to such an agreement, under which they can execute transactions. In the case of Islamic banks, which they can, in the case of Islamic banks, however, there is currently no common standards among them. This is an issue where clearly there is room of improvement. And on that, the industry needs to address urgently. An acceptable standard must be implemented and followed for Islamic banks to grow in this sector. The role of the government is certainly important too. If the governments and the UAE central banks are able to support Islamic banks and facilitate transactions at these banks, such support would be beneficial to the nascent industry and many parts of the world. During a recent global financial crisis, some of the region's central banks were able to offer a line of credit to the distressed institution that banks draw on. The services had tags and terminology attached to it, such as interest, overdraft facility, which we know are not Islamic and not good for Islamic banks. So Islamic banks, if they need to draw on that facility, had to follow very lengthy procedure. They were also required to try and clarify with the central banks under what Sharia structure they could draw. This is an example where the government and regulatory support should be more
à l'intérêt et à d'autres exigences de la charia. Dans certains marchés tels que le Qatar, les banques traditionnelles n'ont pas le droit d'utiliser les moyens de financement islamiques. Il faut choisir le type d'opération, soit traditionnel, soit islamique. Mais il faut réfléchir à des mesures incitatives permettant de faire appel davantage au financement islamique et aux banques islamiques. Bien que les banques de la région sont bien capitalisées, des réformes permettraient à ces banques d'avoir un niveau de crédit plus élevé. Malgré ces défis, il n'y a pas de doute que l'internationalisation de la banque islamique et du financement islamique nous permettra de trouver des moyens de réflexion plus créatifs pour trouver les solutions nécessaires pour le renforcement de la finance islamique et pour établir des liens avec les entreprises et les régions du monde. Nous voyons que cela est actuellement en cours, mais il existe du chemin à parcourir. Mesdames et messieurs, je vous remercie de votre attention et je vous souhaite plein succès dans vos travaux. Je vous remercie.
Thank you, Excellency. I would now
Je vous remercie, Excellence. J'aimerais maintenant appeler Son Excellence Azim Ibrahim, Premier ministre adjoint du Tadjikistan, pour prononcer son allocution. Au nom de Dieu, le clément, le miséricordieux. Excellences, Mesdames, Messieurs,
distinguished delegates. First of all, let me express my gratitude on behalf of the Tajik delegation to the hostess of the 10th World Islamic Economic Forum for the invitation and organization of such a high-level event. I am confident that the aim of today's forum is to accelerate integration processes and enhance supportive activities amongst the Islamic State, as well as to encompass the issues related to the enhancement of the mutual relations, including trade and investment development, and of course, finding out the new ways of sustainable development of the Islamic states. Distinguished delegates, it is unchallengeable that for ages, the Islamic states have close cultural, economic, trade, and political relations. Therefore, information of the history of the world, as well as modern system of international relations, these states poses a significant role. Relations of our countries within the framework of different international organizations, including international Islamic organizations, are the vindication for the above-mentioned words. Furthermore, conducting such high-level assembly will give an impetus to improvement of international cooperation of the Islamic State and contributes sustainable development as well as improvement of their commitment in solving particular issues on international level. It is worth to be mentioned that despite all achievements, still we can observe some unequal development of the Islamic State and high level of poverty in some of our countries. Also, Almighty Allah has granted us with all material and physical, financial, and huge natural resources such as water, arable lands, oil, minerals, intellectual and physical potential. In addition, obliged us to utilize these blessings with purpose and effectively. Today's forum that is devoted to finding of the contemporary measures of economic development will increase the importance of the role of the advanced Islamic State in implementation of the events aim, because their qualification and investment can be productive in development of other Islamic states. In line with this, the Republic of Tajikistan suggested 4 directions for cooperation and investment. First, I want to attract your attention, distinguished delegates, to the most important basis of economic development of Tajikistan. There is no doubt that desired economic development cannot be achieved without the electricity supply and implementation of infrastructure projects. In this regard, efficient use of hydropower potential of the Republic of Tajikistan, which is 530 billion kilowatt-hour per year, can provide the states of the region with ecologically poor electricity, which will assist the future development. The Republic of Tajikistan pays close attention to the development of hydropower sector with main priority to construct hydropower stations and electricity transfer lines which have regional importance. Currently, issues concerning construction of electricity transfer lines, Kassa 1000, Central Asia, South Asia 1000, the main purpose of which is to export electricity to the states of the region, including Afghanistan and Pakistan, are situated in the main point of the country's priority. Second issue that I would like to draw your attention to is the communication and transport projects, which, like the hydropower project, have regional and international significance. From the point of view of investment, these projects are more advantageous. For the sake of enhancement of cooperation, improvement of regional relations, the Republic of Tajikistan have significant interest to find financial sources for the development and implementation of constructional projects such as railways, China, Kyrgyzstan, Tajikistan, Afghanistan, Iran, Russia Federation, Kazakhstan, Kyrgyzstan, Tajikistan, Afghanistan, and railway Turkmenistan, Afghanistan, Tajikistan is very important, and we believe that continued negotiations with the foreign partners and other international financial organizations is our main goal. So, the Republic of Tajikistan has vast opportunities for the attraction of investment in processing of mineral resources sector. In our country, about 600 mines of natural mineral and non-mineral resources have been discovered and are ready for harnessing. Out of these mines, out of the mines, in 100 of them, almost 40 diversity of minerals are being extracted. Our country has all kinds of stones, precious metals, and raw materials, harnessing and development of which is also the area of fruitful cooperation. 4. A few words about agrarian and tourism sectors of Tajikistan. Our country has suitable climate of growing many kinds of fruits, vegetables, and technical products. The country has also opportunity to develop mountain, health, and ecological tourism. Distinguished delegates, we are confident that the development of worthy cooperation with each other on a basis of bilateral and multilateral principles is the main tool of solving social, economic, ecological safety problems, strengthening to the world community and each country of the world. In conclusion, I do hope that this high-level event will contribute to enhancement of mutual economic cooperation amongst the Islamic states. Thank you for your attention.
Thank you, Excellency. Ladies and gentlemen, we will now begin today's first panel discussion on Islamic finance's pivotal role in enabling trade. Please welcome to the stage Toby O'Connor, Chief Executive Officer of the Islamic Bank of Asia, Dr. Adnan Chilwan, Chief Executive Officer of Dubai Islamic Bank, Arif Osman, Global Head of Wholesale Banking at Abu Dhabi Islamic Bank, and Muzaffar Hisham, Chief Executive Officer of Maybank Islamic Berhad, accompanied by the session moderator, Samad Tirohi, Chief Executive Officer of Citi Islamic Investment Bank.
Excellencies, ladies and gentlemen, welcome to this panel discussion. A lot of the topics that we are going to cover have already been highlighted in the keynote address. So we intend to make this a very interactive and hopefully exciting conversation for so early in the morning. So before we go into some of those specific themes, in terms of setting the stage, now one of the things that as practitioners in Islamic finance, as banks in particular, we're often criticized is that the industry has not managed to transcend borders. Geographically, the appetite of Islamic banks have been limited to certain geographies and not cross-border trade, because ultimately the objective is to enable trade. So maybe I'll ask the first question to perhaps Adnan Chilwan, Dr. Adnan Chilwan from DIB. Adnan, what do you think? What is holding us back?
Thank you, Samad. I was very happy that I was not supposed to make a presentation standing there, because usually you can't see me on the podium. But I'm equally surprised to see that the chairs are so big that I'm actually trying to adjust here. But as long as you can see me, that's all that matters. I think the moderator has the most toughest job, right? So nobody introduced the moderator. He's had this job of introducing all of us. I think Samad here, my friend from Citi, has the most toughest job. It is to actually tell you that the interesting part of the day is now over. This is where the boring part starts. But specifically on your question, I think clearly if you look at world trade and how world trade has evolved over the last 30 years, we've seen a 7% increase year on year as far as world trade is concerned. Now, that's on a more global basis, right? It peaked all the way up to $18 trillion way back in 2011, even at the peak of the crisis. But if you actually try and look at a more narrow perspective, you'll see that the fastest growth for world trade has been in developing nations. And again, if you look at developing nations, you'll see that OIC countries' contribution to that trade is clearly very insignificant. While it is growing at a more faster pace, given where the total world trade is, you would obviously see that the denominator of world trade in OIC countries is so small that the growth looks significantly bigger. If you just try and focus on OIC countries for that matter, and which are Islamic countries, and everybody in this room knows what OIC countries are, you'll see that Islamic finance as such in these countries has not penetrated, leave alone world trade. Look at countries like Pakistan, Bangladesh, Turkey, Malaysia is an exception, but other countries that come within the OIC platform or included within OIC countries, you would clearly see that there's a lot of room for improvement of just Islamic finance. And Islamic finance and Islamic trade would go hand in hand. I think Islamic trade would automatically increase provided that there is more penetration of Islamic finance in the OIC countries. So as Islamic banking practitioners, I think the first thing that we have to do is try and make sure that Islamic finance penetrates in OIC countries, one. And given the size of the population, you look at predominantly Muslim populations in OIC countries, but if you look at Islamic finance in these countries, you'll hardly see 4 or 5% penetration. Yeah. Clearly, and I'm sure that you would echo most of what I've said, but once Islamic finance penetrates in OIC countries, the next step is to make sure that all structures pertaining to Islamic finance, Islamic trade being one of them, would try and be maximized to its fullest potential.
Thank you. That's just to add to that point. We were making a point during the conversation here before we got onto the stage about international trade and the role of Islamic banks. I think banks in general do a poor job compared to airlines, for example. Seamless travel has become. I mean, if you book on Etihad, you can go all the way to Brazil and not know which.
Emirates Airlines, actually.
Or Emirates, or any airline. I mean, global airline now part of alliances. I'm saying banks haven't done a very good job of replicating that fluidity in their transactions. So trade finance is the best medium for developing such kind of partnerships with international banks. I think you guys are, Citi is in 106 countries or 110 countries. I don't know the last count. You closed down countries as fast as you opened them, I think. So I don't know where you are now, but in terms of trade development, I think that's the vehicle that we need to.
I think that's Arif, that's a very good point. And talking in the context of an international network, and no, we haven't closed down any countries, but being in 100+ countries, the challenge we have is to be able to enable access for Islamic finance or Islamic financial institutions to this customer base. We often find on the other side a reluctance from clients and customers to transact on a set of documents that are very new, peculiar, very difficult to understand. So we would love to have greater trade generation or trade asset generation that actually can have Islamic finance.
So you're saying lack of standardization?
I think one is an industry context between conventional versus Islamic documentation, but within the Islamic documentation world, I think that there's another challenge, and perhaps you might want to talk about that.
I think our most advanced colleague from Malaysia was just talking to me on the break.
Muzaffar, your thoughts on documentation?
Documentation.
Well, thank you. Bismillahirrahmanirrahim. I think documentation is not a major issue. I think
in your part of the world?
No, I think in any cross-border, I think we got to, maybe if I can start off saying the experience that we've seen where cross-border transaction has flourished, particularly in our experience that we've gone through as in our growth in Maybank Islamic in certain parts of Asia or ASEAN particularly, and the two countries that we have grown quite nicely is in Singapore and of course in Indonesia as well. And the experience that we've seen, the trend that we've seen is, number one, of course, in any cross-border transaction, you always need to be mindful about, number one, is country risk. And number two that we've seen is the policies by the policymakers, be it in the respective countries, on certain key hurdle rates that we have, that allow us to open up the doors. And once the door is open, we've seen a good, tremendous trajectory of growth. For example, in 2012, there are certain direct tax agreements between Malaysia and Indonesia and also Singapore. And there was some policies that has been cleared. And this is on withholding tax. It sounds technical, but it allows a common ground between the two countries. What we've seen after that agreement, within the first 2 quarters, particularly for our clients, we've seen a tremendous growth of about $500 million US dollars of transaction within 2 quarters. So just because of that certain clear hurdle rate, we've seen a trajectory of growth. So I think the conversation between policymakers and players like us, what are the hurdle rates? And that conversation must come in place. Number two, if I may just add as well, in terms of policies, and we've seen here, for example, in Dubai, I think in Hong Kong and Singapore, is the balance between a disclosure-based regime and a merit-based regulatory part of it. And this is a fine balance needs to be mindful about and allowing the market to flourish. And I think if we allow to do that, I'm very confident particularly the Islamic trade side and cross-border will flourish tremendously. And as Arif mentioned about the idea of the whole chain of process flow, I think, this is some of the hurdle rates and the conversation that us as players and regulators need to be mindful about. Thanks.
Thank you very much, Muzaffar. Coming to the point on country risk and appetite for certain jurisdictions. Within the industry, we've seen a number of initiatives to provide credit insurance. IDB Group is championing this. There are specific, in the GCC context, there are specific entities that have been set up to provide that. And they haven't grown in scale. Now, if we look at the conventional banking universe, export credit agency financing is a major component of what banks do, Europe, US, Asia, and elsewhere. Why hasn't this really gotten embedded in a sort of Islamic banking context? And I wonder, maybe you have views, or any of the speakers might want to comment on that.
On the development of
ECA financing in the Islamic
government sponsored.
Yes.
Yeah. Maybe Dr. Adnan can.
No.
Clearly, I think, Samad, one would have to kind of walk before you run. It's a relatively nascent industry. It's a 40-year-old industry. Like I already mentioned, trade is just on the rise as far as Islamic countries are concerned. We first got to penetrate Islamic finance into these countries and then talk about Islamic trade. And when you talk about Islamic trade, then you'll talk about ECAs and you'll talk about credit insurances, which are in a world of conventional banking, which is a 400-year-old industry.
Yeah.
So purely, it is a matter of time. We've seen a lot of transactions that are now taking the Islamic wrapper from a trade perspective. We've got even Islamic trade funds that have been set up recently, whether it's with European International Islamic Bank and Rasmallah that are doing something, or even out of Asia, we've got Islamic trade funds. So you'll see that there are a lot of pioneering structures that are now coming within the spectrum of Islamic finance. And the moment that actually happens, you will have all the wrappers that are needed to make sure that there is an end-to-end processing of a particular transaction. So, for example, Islamic derivatives did not exist 10 years ago, right? You being an investment banker would echo that now that is one of the most important structures that is there in any term Islamic facility as well. So you're seeing a lot of change vis-a-vis structures. So I think it's a relatively new industry, but within the 40 years that we have seen, you have had structures that are far now superior or can compete equally with their conventional counterparts. So I think what one would have to refer to Islamic banking as no more as an alternative form of banking, but actually as a norm of banking.
Yeah. Thank you. We talk about cross-border activity, we talk about cross-border financing, and then trade obviously involves, crossing jurisdictions, connecting economies. And one of the major connections, and I'd like Toby to comment on this, is the similarities that many draw between the UAE, Dubai in particular, and the financial and trade hubs in Asia like Singapore. How is your experience as being based in Singapore, being part of a Singapore financial institution doing Islamic finance? How's your experience been in instigating, in enabling, in acting as a catalyst for this cross-regional financing activity?
I think when you are an Islamic bank in Singapore, which is predominantly a conventional market with a relatively small Muslim population, you very much have to look at it from the demand side of the equation. From where we sit in Singapore, the regulatory environment, the financial structure of Singapore within the Southeast Asian market is very advanced, very established, very developed. Within that, we have what the regulator likes to call a level playing field environment for Islamic. So there's no disadvantages to doing something Islamic. There's no advantages from a regulator's perspective. Obviously, when you get down to the specific deal, it becomes an issue of how the client is going to respond to Islamic versus conventional. And whether the documentation, the conflict resolution on the legal side is as sophisticated or of the standard that they want to transact the business. So there's a differentiation there between the demand side of the equation and the sophistication of the product and where we are in the development cycle of Islamic finance. On both, I'm very confident. On the former, there is tremendous growth all over the place. Dr. Adnan commented on the growth within the Muslim markets, the developed markets, which are predominantly Muslim. That's very exciting in our part of the world. Malaysia, Indonesia experiencing tremendous growth, but also in other parts of Southeast Asia. When you look at the client base, they're less comfortable using Islamic finance because they haven't done it before in a place like Singapore, while in Malaysia, very comfortable. Indonesia, we'll see. A lot of development going on there. So we have a lot of advantages, and we also have some challenges being an Islamic bank within Singapore. Our business is all about cross-border activity, and it's very exciting. We have, within Singapore, a very developed relationship with the GCC. The GCC in Singapore enjoy a free trade agreement, I think the only one in Southeast Asia. Singapore accounts for about number 6 in terms of imports from the GCC countries. There's an awful lot of investment from Singapore in the GCC. So I sit here and think a good portion of that over time is going to come into Islamic finance.
Thank you. When we talk about, now I take the point of first we need to develop Islamic finance and then look at Islamic trade finance. But one of the sectors that in every research piece that's been written, and many sponsored by the Islamic Development Bank Group through their Islamic Research and Training Institute, they all talk about the one key driver for economic growth in the OIC world, and that is the small and medium enterprise, the SME sector. And admittedly, some of the statistics that I have read seem to point towards non-hydrocarbon, obviously, non-hydrocarbon sector. The SME sector accounting for maybe 75-80% of that within the OIC. Right. Now, trade finance or the trade finance products are the most critical ones to enable this sector to grow. So perhaps Arif and then Adnan, you may want to add to that. What views do you have on how does the Islamic banking world actually trigger the small and medium enterprise sector to grow through trade finance products, and do we have enough of them?
Yeah, thank you. I think I lost the bet. I thought you'd come up with SMEs in the first 10 minutes. So anyway, I mean, generally we were speaking behind when we were preparing for this in the sense of how much banks talk about SMEs and how generally banks, Islamic or otherwise, find it difficult to do business with SMEs. And I wouldn't call it lip service, a little better, but we're still far behind the requirements of SME banking. And I think the financial ecosystem that we are all part of doesn't lend itself well to Islamic banking. The cost of delivery, information quality, traditional ways of evaluating credit. I was reading a McKinsey study sponsored by a UAE-based organization about the development of SME banking, and I think qualitative credit assessment, which we are not, you and I, others have not grown up on qualitative credit assessment, is becoming an increasing part of how to evaluate risk. And I think that these tools, unless they develop, and trade is just the next element of doing financial intermediation for SMEs. So, I mean, some of the ideas that we've explored in other markets I'd like to mention is partnerships with audit companies, for example. I worked with Citibank before, and I was in Slovakia, I remember, a very small market in general. And Citi was trying to develop commercial banking and small, medium enterprise banking. And when we looked at cost of credit or cost of money in those markets, it was like north of 6-7%. And the quality of financial disclosure was very poor. So we did a deal with a KPMG or a Big Four audit company that if you did audit them, we would pay for the audit and reduce the cost of money. The company would pay for it by reduced cost of funds. So, I mean, these are possible ideas that you can do collaboration with big players in the financial ecosystem. And unless you develop that, I think trade is the best form of intermediation for small companies. They all need trade. There are product adaptation. I wouldn't call them product development because their products exist. Dr. Adnan said conventional banking is 400 years old. I think all the products exist. It's evaluation and adaptation of those products. For example, we were talking, and I'd like Muzaffar to comment on it, for example, the discounting of export receivables or bankers' acceptances, as they call them in Malaysia. You need to tell us how you developed that, because us banks, I don't know, Dr. Adnan, what do you feel about how check discounting, for example, is a big source of working capital for SMEs. We struggle to do that here. Export discounting, so
absolutely. Thank you, Arif. I think the point that I would try to make is we keep talking about whether the Islamic finance industry actually supports SMEs. I would like to ask anybody, does the conventional banking system support SMEs as well?
It's the same.
Which is, I think, the predominant issue that the SMEs are facing today is once you, either a bank would tell you that you don't meet their definition criteria of an SME, and again, you can say the same things in many ways. But clearly, in the conventional space as well, you will witness that SMEs that are incubating never get finance, whether it is in the conventional space or even in the Islamic space. Now, when the vision of a country actually says that you have to promote and support SMEs, the question that we should be asking is, are we actually doing it? Because nobody is actually doing venture capital. Nobody in this part of the world is giving financing to a company which is 2 months old. Every bank would, Arif refers to as lip service, every bank would actually ask customers, how long have you been in business with? Business in, and what's the size of your balance sheet footing. Now, in the absence of that, are we actually supporting SMEs? Leave alone Islamic finance supporting SMEs, but generally, are we actually supporting SMEs? My 2 cents on that is, I don't think so in this part of the world. Having said that, 85% of the economy is SME based. So I think what you're indirectly trying to do is tell the SMEs that actually go, stand on your feet, work for 2 years, and once you're successful, come to us, we'll give you a finance. That's exactly what happens, right? Whether we like it or whether we don't. Now, there are banks that, try to be on the bandwagon and say that we are supporting SMEs and this is what we do and this is what we don't. The question to all those banks would be, would you lend money to a company that has just started? The answer to that is we all know. So clearly, I think rather than just coming up with visions and mission statements that we are here to promote the SME industry, I think we've got to be far more responsible in trying to actually promote the SME industry. Elsewhere in the world, there are programs and there are funds that actually support SMEs that are incubating, right? Which is exactly what you need to do. I think it's very easy to give money to somebody who's been in business for about 5 years or 3 years for that matter. But it's very, very difficult to give money to somebody who's just recently set up an SME business. So I think the angel is in the details, like they say. We've got to separate the wheat from the chaff and actually.
So not only SMEs, you're talking about startup SMEs, which is even more difficult.
Which is what are incubating. But Muzaffar's take on that from Malaysia.
If I may just add, and just to echo on Dr. Adnan's saying, I mean, if you ask us in terms of supporting SMEs, the risk is high. But, and I'm saying this not because the Malaysian government officials are here, but one of the key fantastic policies that we've seen, particularly for Maybank Islamic, when the government has established what we call a smart partnership in developing the SME. I'm a truly believer the SME is your catalyst of the growth in the emerging markets. Certain policies that the Malaysian government has in place, rather than shifting towards grants, but giving more of a credit support. For example, we have an organization called Corporate Credit Guarantee. Certain government agencies provided certain percentage of credit support, and the banks will come in complement the support of SMEs. Hence, folks like us, we would be able to free up certain parts of our risk-weighted assets. Now, when that policy was in place about 5 years ago, on average, our SME and medium enterprises were growing between 10-15%. After that policy was in place and really encouraging growth of the SME, we're seeing our portfolio growing between 25-30% year on year over the last 3 years. And I truly encourage that, because we don't want the government to giving grants, because that would create moral hazards issues, but to allow certain complement on the SME. And we've seen some nice growth stories from entrepreneurs who are starting up with a turnover on year of between 5 million US and growing to a company becoming an enterprise of 40, 50 million US or 100 million US of turnovers. Now that's a nice success story that we've seen. Of course, there are certain risks that the banks have to take. We need to manage that portfolio more effectively. That's our responsibility. But I truly agree on what Dr. Adnan is saying and what the panel is saying. The focus for emerging markets is SME and medium enterprises, and in this topic of trade finance as well, to allow us to work with the SME and how we could open that cross-border transaction. That's very important. Thank you.
That's actually it's a very valid point. We have I think we're being self-critical in terms of what commercial and Islamic banks are, and the DNA of our credit approval process and analytical process does not lend itself to dealing where you do not have financial information. You cannot make a decision or credit decision. Yet the very products that we have a monopoly over are the ones that these particular entities need to grow, whether they are domestically focused SMEs or whether they are export focused SMEs. And your point, and I think maybe we shall conclude this particular section on that, is for Islamic finance as a whole, not necessarily Islamic banks, to support the growth of trade coming from a particular sector, the government must be involved. Is that what we're concluding? Is that there must be a non-commercial strategic drive by either a regulator or a government body that enables financial institutions to be involved in this sector, but not in the way that we would normally assess credit?
I don't think we're saying that. Okay. I think that's clearly helpful. I think whether you're an Islamic bank or a conventional bank, we adhere to risk guidelines, risk policies, and SMEs inherently are higher risk. So we may not be talking about credit risk. We may be talking about structured financing risk or even equity risk. And I think, like fully agree with Mustafa. In Asia, the SMEs are such an important part of the development framework. New companies emerging that you can't afford not to be looking at those companies. And for Islamic finance, it's a huge opportunity because there is no incumbent. We're not displacing conventional. We're not displacing conventional relationships and thought processes within those companies. They need capital. They need not just capital. They need human support, advisory services to help deal with many of the issues that the growth companies have to deal with. Within Singapore, one of our shareholders, DBS, have a pool of capital which they are providing to small amounts to a large number of SMEs. And one of the initiatives we've got going on there is some of the IBA employees are supporting and basically shepherding, acting as an advisor to help those companies develop in time, which will develop into banking and other types of relationships.
Thank you very much. I think some of the experiences that you've had in the Asian markets are certainly relevant for the rest of the Islamic finance market as a whole. I'd like to conclude and thank all of the participants on the panel for joining and sharing their views. And I'd like to then open up for questions in the audience if there are any. And we do have 10-15 minutes allocated for Q&A. If I may ask the organizers to. I believe there's a question towards the end.
Got one there on the right as well.
And there's one right here as well. I think the advisory point was valid. I mean, advisory point that you made.
No, I'm very excited about that part of the market. These are entrepreneurs. They're developing very quickly, and we know, particularly in high-growth markets like a Dubai, like a Singapore, like a Malaysia, Indonesia, that these companies become quite important quite quickly. And if you can get in there early, maybe not with lending capital, but with human capital, you'll be well positioned.
Please.
Thank you. I'm Dr. Ghazali from Malaysia. I was working in Islamic Development Bank before. I have read the delegate's profile and report for the merit. If you look on pages 26 and 27, it talks about the glance of the OIC. When you talk about the topic today, you're talking about the role of banking in promoting trade, facilitation, and also financing role into it. My question to all of you is that today, have you read on the top countries of the OIC? Because there is a reality check. And you talk about the top countries who have most money. The question is for the bank to ask, in this world of digital age, do we have a convergence trade platform? We cannot solve the problem of the Ummah all overnight. But we have 10 good countries with all the money and 10 good countries with the big population, what Mr. Adnan mentioned. Therefore, that is the first key question. You are. And second point, the role of Islamic banking today has what Mr. Mustafa and Mr. Adnan is quite candid to. You are just another facet of conventional banking. I challenge all of you to see how would Islamic banking differ in its total worldview. You are not making profit. You are making provisions for mankind. So the question is that how you become an enabler of the well-being or the human progress development. Not for the sake, because in Malaysia, as you mentioned, we talk about smart management. Everybody has a share in humanity. And now with Dubai coming a center of capital, we also challenge them whether they will become the center of civilizational. Because in the early civilization of great empires, Muslims were having partners with non-Muslims in the great empires. For your information, you read there's a book called Asia, and where he was a leader, empires were built of all humanities. My third question to all of you is that how would you not see today a radical shift in the instruments of Islam, zakat and waqaf? We have not made it into an able economic machine, rather an observance of ritual practice. For example, in Malaysia, we have 1 billion in zakat collection. It has become only fulfillment of the 8 tenets of what we should do. But if the Muslim security, if the Muslim success, and its future fate is threatened today, when we do not have an economic state in the new digital age, how much are you willing to ensure that the Muslims of tomorrow would have a digital platform. Because today, banks' role today are irrelevant. Because when you introduce digital age, crowdfunding, crowdsourcing, and all those things are happening right in your backyard. Therefore, the Muslims, if we are futuristic alone, the bank must live for the future, not yesterday history. Thank you very much.
Excellent. Thank you, Doctor. Fantastic questions. Moderator Samad is going to answer all of them.
Yeah, I think that's a nice way of deflecting.
No, I think he raises some very good points, echoes to most of what we have said. At least if you look at trade within OIC countries, and thank you, Doctor, for actually echoing that, is that trade in the OIC countries where influx of I would say majority of the population is Muslims. You've got to first look at the first 10 countries, and if you improve trade within those countries and Islamic finance within those countries, I think you've come a long way, one. Two is, clearly I think one of the questions that he mentioned was, Muzaffar, on your comment, especially in Malaysia. So if you want to...
Sure, of course.
Yeah, go ahead.
Well, just give me about a minute or two to just answer. I mean, there's a lot of questions there, Ghazali, you highlighted. I think on number one, you were talking about the OIC countries and so forth. I think we touched this earlier. My recommendation or suggestion for countries among OICs, there must be an open reciprocity in terms of policies when they talk about cross-border liquidity transferring one another. I won't mention names of the countries, but I think there are certain policies where a certain market is open, but a certain market is not open among OIC's countries. So we've got to take a step back and ask some of these countries, do you have pure reciprocal policies among trade countries, among OIC countries? That's number one. Number two, on your facets of the zakat and the banks, yes, I agree. But I agree with Dr. Anand's earlier comment. We have to walk first before we got to run. Maybank Islamic, we just started as a subsidiary in 2008. We were managing an asset of about 10 billion US at that point in time. Now, alhamdulillah, we're managing about 42 billion US. We're contributing to Maybank Group in Malaysia about 40% of its assets. Wow. We needed to have some time to make sure we are strong. We are continuing in our zakat program, and we, in fact, yesterday announced on our Wakaf initiative as well. And I could totally agree on that, and I totally encourage all Islamic financial institutions to go towards that. And Wakaf is the final swing of our growth to the Islamic financial institution. Yeah. And if I may just also add, I think in terms of, you mentioned about crowdfunding and crowdsourcing, and we had some conversation earlier, and the interesting development particularly in Malaysia and to a certain extent in Indonesia, if you deep dive on some of the regulation, particularly in Malaysia, we've just introduced a new Islamic Financial Service Act, 2012 or 2013, and even under the Indonesian regulation on the OJK. The interesting part in the development of Islamic finance that we're beginning to see on the concept of mudarabah, whereby the regulators are allowing to share the risk. And in sharing that risk for Islamic financial institutions, we will be able to free up some of our risk-weighted assets. So can you imagine an Islamic financial institution now, in future, and I'm very confident on this part, you're not only looking in terms of your capital of your tier 1, tier 2, but there is this element of your investors that could free up your risk-weighted assets as well. So that is, by default, an automatic source funding. And for Maybank Islamic experience, for example, we emphasize on value first. In fact, our customer base, being in Malaysia as a multiracial country, 50% of our customers is non-Muslim. So that speaks by itself that Islamic platform has a value that we can put up. And I'm very confident of course, with all of us here, that value is very interesting, and I'm very confident that growth is going to trajectory at least 20-30% year on year in the next 5 years, or else I need to send my CV to another new job.
Yeah, I think, and then the final question is comparing Islamic banking with conventional banking, and is it only another facelift? I think I slightly disagree with that. Clearly, I think because the conventional banking system is a relatively older system when compared to the Islamic finance, it has become a benchmark and a way of measuring things. But like I said, Islamic finance in maybe 20 or 30 years is going to become the norm of banking, and we'll stop calling it an alternative form of banking. And I think as practitioners, we are heading in the right direction. It's an industry that has been more resilient even through the global financial crisis. There are product structures and product gaps that now have been addressed. So I think we've done the right things. There is clearly potential as well as demand. You're looking at more and more non-Muslim sovereigns coming with Islamic structures. So I think it's just a matter of time that instead of referring to it as an alternative form of banking, it's going to become the norm of banking. So inshallah, with the help of all practitioners in this room and maybe beyond, we will try and make Islamic finance stronger than ever before.
Thank you. There's another question on that side.
Assalamu alaikum. You have been talking about Islamic finance not beyond OIC countries. It is developing between OIC countries. There are non-OIC countries where there is sizable Muslim population. Why not you consider Islamic banks from Dubai, Middle East and Malaysians reaching to non-OIC countries where there is sizable Muslim population?
Arif, do you like to?
No, of course. I mean, it's just a question of sequence. Banks will go where the customers are, where the markets are. And for example, India, has a very large Muslim population. Regulatory framework holds us back, but there are Islamic finance companies now taking root in India.
Yeah,
it's a good example of.
Clearly, I think I completely agree with you. But then again, you've got to first, put your house in order, right?
That's right.
And like Arif says, it's a matter of sequence. Contrary to what a lot of people know, India has the second largest Muslim population in the world, with about 180 million Muslims. But I think why one would naturally focus on OIC countries is given the population dynamics of those countries. But other than that, there are OIC countries that maybe might, not take the lead in terms of Islamic financing, and there are non-OIC countries where a predominantly Muslim population. India is a good example. We've got also demand out of Europe for Islamic banking services, Northern America for that matter. But I think given the relatively nascent size and the nascent being of our industry, I think it will just take a time to actually go towards those. But somebody would have to lead and others would definitely follow.
And the enabling framework, I think.
We have time for one more question. If
there's a gentleman from the back who's been raising his hand consistently.
Who's had his hand up since the beginning. So.
Right.
Assalamu alaikum. My name is Hamed Agemo and I run Hodari Partners. I just want to follow up on a question made by Mr. Sirohe. Sorry if I mispronounced your name.
Yeah.
In Africa especially, Islamic finance represents a great alternative to the currently limited conventional financing. And I remember Mr. Shiwane's answer on ECA financing and credit insurance. Unfortunately, in Africa, it's very difficult today to execute a project without credit insurance. So my question to all of you in the panel is, how much appetite do you have within your institution to look at projects through Islamic finance in sub-Saharan Africa? And where do you see that trend going within the region? Thank you.
Sure. Clearly, this is not lip service. I think from Dubai Islamic Bank, we believe in Africa. And we have clearly made inroads into East Africa. So if you look at the East African belt from Kenya, Tanzania, Rwanda, Burundi, Malawi, all these countries on the East African belt have about 100 million Muslims. Not just that. So our entry point into East Africa would be through Kenya. We are looking to set up operations in Nairobi very soon. Clearly, in the absence of credit insurances, I think the only transactions are still possible, but the only thing is that they become costly and expensive. But having said that, I think the potential that the sub-Sahara Africa has, or the East African market has for Islamic finance is just enormous. And keeping that in mind, I think Dubai's ambition to connect and be the hub between the East and the and the sub-Saharan Africa is now seeing the light of the day, and there are institutions that are targeting Africa. And I think the moment they start working in Africa, I think ECAs and credit insurances would logically follow. So I think it's just a matter of time. As far as we are concerned, we will start operating in Africa by the end of the year or early next year, subject to regulatory approvals. The moment that happens, Kenya would be a start point, and then the other countries within that East African belt. Once Tanzania, obviously, I've mentioned to you. So we are also working very closely with the ESSB, which you would be familiar with. And once a bank as large as Dubai Islamic Bank would try bringing Islamic finance to East Africa, I think the others would naturally follow. There are international banks that are currently doing Islamic banking within West Africa, but I think it's just a logical extension. It's just a matter of
Egypt,
time.
would you classify Egypt? We have 70 branches in Egypt as Abu Dhabi Islamic Bank. We have presence in Sudan. There are opportunities.
Yeah, Sub-Saharan Africa, basically, was the question. So.
Yeah.
Thank you very much. I believe our time is up. I can see our counter now flashing. So I'd like to thank my esteemed panelists for their time and their thoughtful views on the topic, which there are no answers, clearly. There are many challenges, but at the same time, there are quite a few opportunities that seem to have been identified, and there is work happening towards that. So I'd also like to thank the audience and everybody here for their patience and listening to us and asking very relevant and very interesting questions. And on that note, thank you very much.
Thank you.